It's a good start, as we were expecting earlier on as well. Let me just quickly run you through a bunch of other names. Bharti, of course, is the big mover. Look at TV18 broadcast. I want to just put that up. Of course, it's part of the Reliance group, and it also is where CNBC-TV18, the channel that you're watching, is housed. That is at 64. It was up 20 yesterday. It's up another 10 right now. Very big volumes, by the way. So that is TV18 broadcast. LIC Housing is up 6.5%. There is Coforge, which is up 7%. Zomato is something Sonia mentioned. It's up 5%. India Mart, right? 2010, 20. It's just been a collapse on India Mart. It's up 4% right now. Birla Soft is another company we spoke with earlier at 8:30. Birla Soft is up. Not Birla Soft, beg your pardon. So Birla Soft is up about 3.33% or so. Root Mobile is up about 6.5%, and Intellect Design is up about 4% as well. So this is, a bunch of names. 1,500 stocks are higher, 230, 240 stocks are lower at this point in time. Let's focus on Bharti. Mangalam is standing by, of course, that pref issue to Google. What would it mean and what are the contours? Mangalam, over to you.
Well, Google has announced an investment of close to around $1 billion in Bharti, of which $700 million, or roughly 5,200 odd crores, will be issued via preferential shares at 734 rupees a piece. And the other $300 million will be, go towards implementing commercial agreements, which will include investments in scaling Airtel's offerings that covers a range of devices to consumers and innovative affordability program, etc. This has come in through Google's Digitization India Fund, which they had launched way back in July 2020. It was a $10 billion fund, so of which $1 billion has now been committed to Google. $700 million will be going in as direct equity ownership in Bharti Airtel, and alongside that, the other $300 million will be used for them to ramp up their businesses, as well as scale some of their offerings up as well. So short point is that they get a war chest of nearly 7,500 crore rupees.
Okay, Mangalam, thanks a lot for that. Of course, Mangalam broke this story first. Let's go across to Rima as well. She tracks Airtel, of course. Rima, this is the big news, of course. We were expecting that. Now it's official. What does this mean for company now?
Well, for one, they've got a very marquee investor on board, Google, which will be holding a 1.3% stake in Bharti Airtel. And remember, Google already has a tie-up with Reliance Jio. Google and Reliance Jio had, brought about that affordable 4G smartphone. Now that Google is also tying up with Bharti Airtel and investing money in it, perhaps it's going to give a sense to the market that the ecosystem, the telecom operators, are willing to collaborate. It's not so much about competition between the two. And this is what's interesting, right? Mangalam told us that $1 billion breakup, $700 million will, go into directly, which goes into the company, which will help Google get a 1.28% stake. But the balance $300 million, as he said, will be towards a potential multi-year commercial agreement. And here they are talking about affordable smartphones. So they are talking about hardware, which is pretty much what Google is doing with Reliance Jio. So they're saying companies will continue to explore further opportunities to bring down the barriers of owning a smartphone across price ranges in partnership with various device manufacturers. So this seems a little similar, very prima facie. We'll try getting in some more reactions and comments from experts as well. But prima facie, it does seem very similar to what it has with Reliance Jio. And I think the signal it provides is that perhaps, the telecom operators are willing to collaborate rather than compete. And this is a positive sign for the industry as well. For Bharti Airtel, it's money which is coming in. It's money which is coming in from a very marquee investor. And one, Google, which can provide hardware as well as software. So Google and Bharti can even collaborate on cloud networks, for instance, and a lot of cloud native applications as well. So in that sense, it's a win-win for Bharti Airtel, no doubt, for Google, as well as for the entire ecosystem. Back to you.
Okay, the stock's seeing a bit of profit taking now, Rima. Thanks for that. We'll revisit Bharti now. For now, Mahesh Patil, CIO of Aditya Birla Sun Life AMC, is now joining us. Mahesh, good morning. Thanks for joining us. Before we discuss markets, any thoughts on this Bharti Google deal?
Well, I think the telecom space is looking like, just providing the pipe and data services, I think is not going to be enough. Really, how do you monetize that further? And that's where partnerships, I think, whether with content providers or any other platforms, I think that will be the game going forward, because normal tariff increases, while there is still scope to do that, okay, it will be limited. I think other services, if you're able to offer over that and monetize that, I think that would create value. And in that direction, I think it's the right step, I would say.
So with large players, large global players investing into many of the Indian telecom makers, do you think the best is yet to come? Because the rally has been sharp, right? Whether it's Bharti, whether it's Reliance. If someone has perhaps missed out on this move, is it still okay to buy in?
I think, I would not expect too much of explosive growth in this sector because the sector, in a way, is well penetrated, right? But I think there are still room for tariff increases. This sector has seen a consolidation now. So the pricing was what we saw earlier. That fear is now out. And I think steadily you would see as people move up, right, and move into higher plans, they'll be upgrading their plans. And to some extent, there is, as I said, some room for tariff increases. I think that will continue to drive revenue growth and EBITDA growth. So I think it should be a more steady performer from here on, without too much of volatility and hiccups. In that sense, I think it becomes a good defensive sector to look at from a long-term perspective.
Mahesh, hi, good morning. So we'll come back to Bharti and the investment there in a bit. But markets, Mahesh, that's been the big story, isn't it? Really all over the place. What have you been doing? Have you been buying aggressively, or have you been slow in deploying funds which are flowing in? Not just into your fund, but across the MF industry.
Yeah, so I think at the beginning of the year itself, I think when we came with the annual outlook, we said that this is a year is going to be a year of transition. We see the whole large liquidity, low interest rate environment starting to normalize, and that will impact while the outlook for the market still positive, and we are positive in the market, but that will mean some normalization of multiples, especially in some of these high growth stocks where you will see some correction. And we've seen that globally. There's a big divergence which has been there in the market, right? While the headline indices have fallen by around 8 to 10% or so, but stocks have fallen by 30, 40, 50% also. So I think that was something which was expected, and that's what we're seeing play out. Having said that, I think our portfolio positioning has been that this is a year where you would see markets will be slightly more discerning. The risk, will be priced in much better. Last year it was a full risk-on rally and everything went up. I think this year it will be more driven by fundamentals, I would say, and companies which are seeing a steady growth or earning visibility is good. I think they will continue to do better, even in terms of stock price performance. So I think that's what our focus has been, and trying to eliminate some of the risk in the portfolio. And I think otherwise, I think you will see these bouts of volatility play out, I think, in this kind of an environment. And we haven't seen that last year. But I think this, will be more common, in this calendar year. And that will also provide opportunities, because when dislocations happen in the market and when there's serious sell-off, that's the time you get good value in the market. Stocks, even good quality stocks, which were expensive and we were probably out of our radar. I think we are seeing a good correction there. And apart from, maintaining a slightly more pro-domestic stance, I think we have not done really much. We think that this year probably it will be India domestic-centric stock, whether it is the recovery or the banking and financial services sector, will be better than some of the global stocks. That's what our view has been since the beginning of this calendar year.
Okay, by the way, the market always surprises you. The mid-cap IT space, which has seen the big correction, is now really surging. Coforge is leading it with 8% rally. Remember, Coforge corrected 25% last month. Firstsource is up, L&T Tech is up, Mindtree is up, and Persistent System, the biggest outperformer, that's also up quite a bit. So Mahesh partly answered that question, but I still ask this on mid-cap IT. Is there a bit of a risk of a bubble, or do you think the market's already corrected that with last month's correction? How would you approach this space now?
I think rather than mid-cap, I would say the overall IT sector itself, right? I think you have to differentiate a bit over here compared to some of these high-tech stocks which have seen a large correction globally, right? If you look at the IT sector, clearly there has been some, the valuations there had moved up compared to the long-term averages. But the underlying growth in the IT sector is still fairly strong and robust. If you look at the commentary from the large IT players, they are seeing good visibility for growth for the next 2 to 3 years, and good cash flow generation. So I think beyond the point, these companies, will see a support. Some exuberance was there globally, and we saw some of these large IT names, their multiples went up. But at a price point, I think these companies will find support. And I don't see much of a challenge over there, at least for the large IT names. There is some kind of a margin pressure because of the inflation on the wage inflation, but I think large companies will be able to add at the lower end and train people and manage that. In the mid-cap IT space, I think, again, it will be more stock-specific. We have seen some of the companies exhibiting very strong growth, much higher than the larger companies. And there is still opportunity there on the digital front. There is a lot needs to be done. So I think companies in the mid-cap space which continue to exhibit reasonably strong growth, I think they will continue to come out. I think some contraction of premium is warranted, and that's what we've seen happen. But I think it will be, I think in mid-cap space, the risk will be slightly higher because there the pressure on margins will be much bigger because the ability for them to really get the talent pool at the entry level is slightly difficult. They have to do lateral hiring where the cost inflation is very high. So how they manage that, I think, will be critical for us to see how some of these mid-cap names do.
Okay. Well, the mid-cap IT space is really picking up pace now. I mean, just look at some of these stocks. Route Mobile is up almost about 11% on Route Mobile, and a whole host of others actually picking up pace. Coforge, I think the street likes the fact that Coforge has raised its revenue guidance, its full-year revenue guidance. So Coforge is up almost about 8% odd. Mahesh, we're going into the big event, the budget, with very low expectations, more so because now the budget is, by and large, just become a statement of financial accounts, or at best a statement of intent. A lot of the work is done year-round on policy making by the government. In that context, anything significant that you would expect from this year's budget?
So you're right, I think not much expectation, but I think clearly if you look at the pockets of the economy which has got impacted really in the last year, has been to some extent, we have seen overall consumption has definitely hurt, and especially on the rural consumption. That's what we see from the commentary from some of the large players, right, in the industry. And that's a segment I think that the government will want to really give some kind of a boost or support to that sector. Again, looking at the elections, okay, which will be there 2 years down the line. So this is a budget where, if at all, they need to address some of these things and stimulate growth. I think overall, the budget will still be pro-growth. I mean, that's what the narrative was in the last budget, and that will continue over here. But trying to stimulate consumption, rural consumption, I think that's an area where I think it will try to focus on and build the momentum so that when we exit next year or 2 years down the line, okay, we should be able to come back to our potential growth rate of around GDP growth of around 6.5%. And while investments also would be one of the legs which the government would like to focus on, and they done quite a few things the last two budgets to stimulate that. I think these two areas would be the focus for the government, though, and I think they will still be accommodating on the fiscal side. We don't see they'll be really in a hurry to really bridge the fiscal deficit. So by and large, I would say it will still be supportive for growth is what I think the general expectation would be in this budget.
All right, Mahesh, it's a pleasure. Thank you very much for joining us and running us through what you make of things. I mean, the last bit on the budget, I think, is important to put in context, as Mahesh did for us. 188 points is what we have on the Nifty, 17,290. So this is super strong. Let's just quickly put up Map My India. I mean, I don't know if I'm reading the price right, at least on my screen. It's down about, what, 7-8%. Numbers, of course, came through. We highlighted the numbers as well. Yeah, I mean, 6% lower. And it's off the highs by, it's off the lows by quite a bit, even after what we're seeing on the price. The other one is Deepak Nitride. That is going the other way, right? I mean, numbers were nothing great, but the fact is that the stock had sold off quite a bit coming into the earnings. So that is up about, what, 3.5% as things stand right now. And right now, we're just passing the 200-point mark plus on the Nifty. Banks, of course, are doing well. The PSU bank space, look at BOB and a bunch of others. There is a fair bit of activity. Dalmia Bharat posted a mixed set of third quarter earnings. Sales looked good, coming in above expectations, but realizations were down about 5% quarter on quarter. The company has also seen an operational miss with EBITDA and margins failing to meet street expectations. Mr. Puneet Dalmia is Managing Director at Dalmia Bharat Group. He's joining us to